Good evening, everyone. Yeah, I hope you can all hear me now. Okay, welcome. Yeah, okay, let me continue the webinar. So, today's topic is support and resistance. Purely support and resistance. So, I'll be showing you different tools, different things you can do with your support and resistance, when to enter trades and when not to enter trades, when to respect support and resistance and when not to respect it. Okay, first of all, I will introduce what is meant by resistance to you. So if there is a bullish market like this and there's a change in trend at a particular point, this point which a bullish trend changes back to a bearish trend is called a resistance. And the point where a bearish market returns to an uptrend, which is also a bullish market, this point, I'm talking about this point, is called a support. So now, how do we use this support and resistances? You can use support and resistance to scalp. You can use it to trade on long-term trades also. What do I mean by trade? Whereby you enter and you exit almost immediately, you're in profit. You're not holding it till maybe you're not holding it for a very long time. You're not trading on a trend. So yeah, I will show you how to use support and resistance to scalp firstly. So how to use support and resistance to scalp, let me go back to, I'm using volatility 25 to explain. So once you are on your charts for scalping, I prefer using 30 minutes or 15 minutes time frame. So this is 15 minutes time frame. So what you need to do is draw out notable resistance and supports while on 15 minutes time frame. Notable. So right now I drew this one out. So let's see. That's for that one. That's a support level. Let's see if we can still get more. Please note that this is for scalping strategy. And if you say you are scalping, try to be disciplined. Be a disciplined trader. If you are scalping, don't turn your scalping to a long-term trade. Maybe you used the strategy to enter for a scalping trade, and you later went back to a higher time frame, and you discovered that it's gonna sell longer, or it's gonna buy longer, and you now decided to hold it. That's not good enough. If you say you're scalping, try to stick to the scalping, and if you say you want to trade for a long time, try to stick to it. So now we have verified support and resistances, and we have unverified. How do you know a verified and unverified support and resistances? When you have a level whereby it has served as support or resistance 2 or 3 times, that is a verified support resistance. And if you have a level whereby it has only tested it once, and you haven't seen any other retests, or where it is being respected again, that kind of level is an unverified. For example, we have an unverified resistance here. That's an unverified resistance. Do you understand? This resistance is verified. This resistance, why? Because it respected it here and also respected it here. This is also a verified one. It served as resistance here and also served as support twice over here. 1, 2. Also, we have another one here. It served as a resistance here, support here, support. If you check this level, you will see that there was a test here. The market broke here and retested it before going up. So it respected it here, respected it here also, and served as a resistance here. So this is a very good support. So this kind of, whenever you have this kind of support, this one that has been respected multiple times, try to change the color and also change the pixel. So whenever the market is coming back on that kind of trend, on that kind of level, you respect it the more. So I'm changing it to blue. So now, what do you do? How do you use this? Remember, we are still on scalping strategy. How do we use this kind of support and resistance to trade? Whenever you are on a verified, okay, so for example, we have this one as a non-verified. So since it is not verified yet, you can also change the color. So let me change the color and the pixel. Let me change it to yellow and change the pixel back to 1. So is yet unverified. Do you understand? So let's check the movement of the market. So right now, let's assume this is the current price of the market. So let's check as I'm scrolling. So now you can see this market came down below to this verified point, right? So what do we do? Since the market is coming down to hit the level, so we expect it to bounce from that level. And remember our support and resistance trading strategy. the bounce, the break, and the break and retest. The conservative traders and the aggressive traders, I hope you still remember all those ones. So for the bounce, if you are waiting for a bounce, had it been this market as it was coming from up, from downwards from here, had it been it's bounced from here, you would have entered for a buy over here. You would have entered for a buy. But since it is not bouncing, you can see it broke it immediately it was coming. So since it has broken it, you would have waited for a retest or enter for a sell immediately. So let's see, if you waited for a retest or entered for a sell immediately, it broke the level. So let me use this cursor. So let's assume you entered for a sell here. Remember, we are scalping, so you entered for a sell at this level at 22.75. so after that, the market came down to, after entering for a sell, maybe for aggressive traders, the market came down below to 22.70. So once you notice a retracement course, there's another support level here. Can you see it? There's another support level here. So if you've entered for a sell here, remember this is 15 minutes time frame, and that would have given you how many pips? That would have given you 4 pips, 4.4 pips. So if you are scalping, you target between the range of 1 pip to 10 pips maximum. 1 pip to 10 pips maximum. Have that in mind also if you say you are scalping, if you say you are a scalper. So this is a successful scalping. Now let me reverse. How is it a successful scalping? There is a level here where you expected the market to behave either to bounce on the level or to break the level. So if the market bounced, you would have entered for a buy, and if the market broke the level, you would have entered for a sell. And now, right now, you can see the market broke the level. So if you are an aggressive trader, you sell here, right, and you get out here. And if you are a conservative trader and you're waiting for a break and retest, now you can see the market tested that level at this zone. The market retested here. So if you entered here, you can see immediately after testing it, it still sold down to this level, returned, and still came down to this level. So if you held it till this level for the break and retest strategy, let me calculate your profits. So if you held it down to this level before exiting the market, you would have gained 5.196 pips. Let's say 5 pips. I hope you get that. So that's that's for the aggressive and the conservative. So let's move on. So we are still checking. This would have been a good point for a buy, but the markets failed to touch our level before going back up. Now this is another level here. So what do you see here? This is a level. It's either a support or a resistance. Remember, support level can also turn to a resistance. Resistance can also turn to a support. That's what we have here. Let me show you that. this same blue level served as a resistance here, it served as a resistance here, and see it serving as a support here. See it serving as a support here also. So whenever you see any level, any line you've drawn for resistance or support, so you can use it for either support or resistance. So where are we? Okay, sorry, I saw something the other time. Okay, yeah, this is a good one over here. If you join this with your candlestick strategy, candlestick pattern, this is a good signal over here. This is a very good signal right here. You see that candle? That's a rejection candle over there, indicating that sellers are in control of the market, right? So now there was a line you've drawn, maybe it was a resistance or support. So immediately you see you see this kind of candle, and this this price, you can see this price tried to break out but still closed back inside below the resistance rather. So now immediately you see this candle, you enter for a sell here, you enter for a sell over there. So remember, we are scalping, we are not entering for long-term trades. So let's see if you can see up to 10 pips here. So let's assume we entered here. Okay, we have 7.9 pips, right? Though this candle is still not showing a reversal, so let's see if it can still, sorry, okay, where are we? Can't find it again. Okay, this is it. This is it over here. Please, if you have any question, you can drop it on the chat box so I can answer you. So this market sold down to this level. Oh, sorry. So remember, we entered at 22.88 and we target, let's say, 10 pips. So that's a successful one, 10 pips. So after exiting, you can see how the market changed up, changed to an uptrend again. So let's see if you can still have another one. You can see it is still respecting that level again. Still respected it here, this on this candle, this. So let's assume we entered here again after this bounce and we exited here, another 8 pips. So that's, now we have, there is a breakout here and also a retest. This is where I'm saying there was a breakout and a retest, and the retest failed. You can see the market still continued down. So what do? Remember, one of the training we did on WhatsApp. When you enter for a buy after this retest, once you enter for a buy, you place your stop loss below this this what's it called, this resistance, and you place your TP above. So this market would have hit your stop loss before coming down here, so you wouldn't have encountered much losses. And for the place your stop loss here. So that's, let's check for another one. Okay, we have another one here. The market came down, went up again and bounced. So if you sold it here, there was, remember, you place your stop loss above here. So there was a consolidation after your entry and still came down to this level. So if you've exited here, let's see how many pips you would have packed. So you entered after this bounce and you exited here. That's 4 pips. Now let's see this breakout strategy again. There was a breakout here. So for the aggressive traders, if you entered for a buy here, you place your stop loss around this level. So for the aggressive traders, there is no entry for conservative traders here because the market didn't retest. Remember, I told you on the training that it's not all the time the market breaks a level it comes back to retest. No, it's not all the time. So sometimes the what's it called, the aggressive traders have more money, more winning trades than the conservative traders, because if you entered here if you entered at this point as an aggressive trader, and a conservative trader still waits for the market to come back for a retest, he would have still waited for a bounce on this level before entering. So you can see that this market, you can see that they are still on the same entry level. So the difference now is just that the aggressive trader would have exited here, and if it comes back again to bounce, then it can enter here again and pack another one. So the aggressive trader has entered the market twice on this same resistance, while the conservative trader is still waiting for a break and retest, and he was able to have only one entry. So do you understand? So as for me, I am an aggressive trader because of this. The same stop loss will still be used for both traders. So if you enter there as an aggressive trader, your stop loss should be below the resistance, and if you enter here as a conservative trader after waiting for a retest and bounce again, your stop loss will be still below the resistance. So that means you waited for a retest, and after the retest you still wait for a bounce. You don't enter here, you still wait for a bounce, then you enter here, then you can exit somewhere here. So this is another good one. Still that verified support or resistance anyhow. This level, this blue level, you can see a bounce here. So let's assume I have entered here after this bounce. Remember, we are scalping, we are not entering for long-term trades. So entered here, maybe you exited here 5 pips. That's a open 5 pips over there. So we waited, or let's say we are waiting for another retest. So we can't enter this kind of trades because it didn't tested the support or resistance. So now see this breakout as an aggressive trader. You enter here for this breakout, then you exit here. But as for the reason why I said after a break and retest you also wait for another bounce, see the reason here. Now you can see there was a breakout here and there was a retest here, and you can see it still broke out it's at the level upward again. So you should have waited for a bounce here. So had it been the market bounced on this level, then you could have sold here. Do you understand? Welcome, Mr. Ali Bites Co. Welcome. So that's a retest. So if the market is retesting a level, also wait for a bounce before you enter for the market. So now see what happened here. The market broke this level upward again and retested here, then it bounced. Can you see that it's bounced there? So let's see if we've entered for a buy at this bounce and place our stop loss below this level. So let's see. So that's another 7 pips. So if you continue with this strategy within a day, okay. Okay, you wish to become a crash and boom prince. So how do we do that? These things I'm doing here also, you can also use it on crash and boom. Yes, you can also use it on crash and boom, either for trading the spikes or trading the normal trend. If for example, if you are on a crash, let's assume, okay, let's go to crash 500. Let's go to crash 500. So remember how we started. So let's go backwards. Okay, and crash 500. Okay, let me draw. Okay, let me draw the levels here. We have one here and it is unverified. Let me move this one down so it can touch at least 3. So this one is touching this support here. There's a little support over there. If you see, there's a resistance here and there's a resistance here. So that's a verified one. Okay, this one also is touching this resistance, touching this support, still close to this support also, and also there's a support here. Let's see this one. Okay, we have another one here. Excuse me. Okay, this one is touching this support and also this resistance, and this there's still resistance on it over here also. So let's continue. Let's place this one here. We have, that's a support zone. So let's assume the current market is here. Mr. Pop Joe. Okay. if you are really ready, then you will do. You are able, you are capable. So let's continue. Hope you understand what I'm doing. So now I've finished drawing my support and resistances. So now I want to use it to scalp, boom and crash. Okay, so now let's assume this is the current price. This is the current price. So if this market goes up and touches this level, I'm selling. Maybe after a rebound, after a bounce. So let's see what will happen. Wow. See what happened here. We were waiting. Sorry, okay, I can't find it again. Okay, this is it. I was waiting for it to touch this level and bounce, something like this. Bounce, then I enter here, then at least exit around this level. But you can see what happened now. Okay, so now see what happened here. There was this level broke, this price broke this level over here. Do you see? It broke this level. So if you've sold immediately, this price broke this level, maybe, you know, there will be a spike. It would have been a spike, and this spike would have ended here. So maybe you entered here at this level. Maybe you entered here immediately after the spike, or maybe you waited for it to return up a little bit before you entered. So at least you would have still parked. Let me calculate. That's still 21 pips. Do you see? So that's 21 pips for that's for the aggressive traders, and for the conservative traders, so it was no bounce. The market broke out again, but the market retested here again and bounced. Can you see? So because the market broke out this level again and bounced, so let's buy here now and see what would have happened. Remember, if you buy here, you are placing your stop loss below this level. So let's see what would have happened. Mr. Olugbodi Amos, sorry about the network. I'm trying to check other. Okay, please let this video still be available after the webinar so that we can watch over it and over again. Okay, sure, it will be available. It will still be available. Just click on the link. Whenever you click on the link, it will still be available. Okay, now back to the charts. Where are we? What's happening here? Okay. So now we've bought here. Let me place a level. So why are we buying here now? Because I already said it, because there was a break here, it broke here and retested. Let me zoom so you can see it more. So can you see it clearly now? We are still talking about this level, not this new one I just drew. So it broke out over here, then came back to retest and bounced. You can see this green candle. So we are buying it on this green candle. Immediately this green candle ended, and we are placing our stop loss below here. So we bought at 98.28 and we are placing our stop loss at, let's place it below this level or here. Let's place it here. So let's see if it will hit. Okay, and let's see, for example, if you are entering this kind of trade, let's see where we can TP. So there, if you can see, there's a little resistance here. So I'm using that as a TP. So let's see what is going to happen over here. So wow, on our TP, so can you see the movement? We entered the trade here, immediately we entered, there was a spike, blah blah blah, then went up again, then after that came up. Hope you are following. Do you understand the strategy I used to buy over there? We are still on support and resistance. No trend line. We are not using trend line here, only supports and resistance. So now the market, I want to recap, the market broke out here, it retested. You can see that it has already broken it here before, then ranged, then broke it up again, came back to retest, and there was a bounce. Then we entered after the bounce. So then we placed our stop loss below the level and placed our TP on the nearest resistance. We use this resistance. So let's see. So our trade have already hit the TP. Wow, see crash 500. So can you see that? So after hitting TP, so that's why when you are scalping, it's better you stick to scalping. So had it been you've entered the market here and was hoping for the market to at least reach here before you exit, see what would have happened. See what would have happened. So may God help us. So you can see with only two candles, it came back to the stop loss area. Can you see that? So try to be disciplined. So we are still working with these levels. Okay, let's continue. Now the market broke this level again, right? It broke this level, with let me calculate the pips we've gathered here now. Let me calculate it. We entered on this level, so our TP was there. Okay, so that's 36 pips. That's a good one. Okay, so let's see what will happen over here again. That same level we've drawn, see it's breaking this level. So as for the aggressive traders, if you've entered immediately after this level, so let's assume you entered, so please, this is 15 minutes, so this might be double spikes or triple spikes on 1 minute. So let's assume the first candle ended here on maybe on 1 minute or 5 minutes. So it might not be only one candle. Note that I would have gone back to, okay, let me go to 1 minute and check. Let me go to 1 minute. So on this candle, this thing is not loading now. Okay, let's go back. It's not loading at all. Let me check 5 minutes. Okay, let me go back to 15 minutes. Oh, this is it. I think this is it. I have it here. Let me go back to 15 minutes. Don't let's waste our time. Okay, this is it. Okay, so back to where we are. So aggressive traders, if you've entered here, so to this level, you can TP here on this resistance here. So let's see, let's make calculate. So that's 20 pips. There's another 20 pips over there. Now see what happened here. You can see after the break there was a retest. So here comes in for the here comes an opportunity for the conservative traders. So retest, and there was a bounce. So if I were you, after seeing this kind of candle over here, I would have entered the trade immediately the candle closed. So I would have sold over there. So if I sell here, and TP on this support, sell here, TP at this support, that's 26 pips. So as for the aggressive traders, remember we've taken $20 pips here, and if you see this kind of opportunity again and enter, that's 26 pips altogether, making 46 pips. So you see why I said it is better to be an aggressive trader now. So we are still on crash. So right now you can see we've bought and we've sold. So it's not about catching spikes here. So you can also trade crash and boom the same way you trade any other indices, and also on forex. So see this level. I don't know where I drew this level from. I know I've drawn it from the past support and resistances also. So see what happened there. There was a break here immediately. So as for conservative traders, what do you do? Aggressive traders, what do? You sell immediately there was a breakout here. So once you sell, let's say, okay, so let's say you sold it here and TP on this candle, that's 41 pips. Conservative traders, remember you are still watching the market, you are still watching film. So when you entered here, your stop loss would have been around this level. So now conservative traders, it seems you now have an opportunity because the market is coming up again. So let's see what's going to happen. Do you know you can't enter for a sell here? Yes, because it has not bounced, you need to wait for a bounce. So let's see what will happen. Wow, conservative traders, sorry, you missed the sell over there. So let's see. So the market has broke out this level again upward. Let's see what will happen. Now it is retesting it. Let's see if it will bounce on that level. Let's see what will happen. Still trying to bounce. Okay, it has broken it down. You can see it has broken it downward and still retesting. So it broke it here totally and retested it here. So we will still wait for another bounce. Always wait for a bounce. So let's see. Oh, can you see it still broke up again? So can we regard this movement, can we regard it as the bounce we've been waiting for here? You know, there was a breakout here and we were waiting for a bounce, right? So let's regard this as a bounce we were waiting for. Okay, so let's buy here now. Let's buy here. So if we buy here, let's look for a nearest support or resistance. This too far, this too far, we are scalping. So let's use this support here for the TP, and the stop loss will be, the stop loss will be here, right? So this is the entry, this is the entry, this is the TP. Let me paint the entry as black so it won't get confusing. Let me paint this as green. And the stop loss as red. So after this would be the end of our support and resistance class for scalping, so we can move to long-term trades from here. So let's place our stop loss here. So that's our stop loss, that's our tip. The stop loss is too far. Let's move it above a little bit. Okay, so let's see what will happen. Oh shit. Okay, it is so remember, this was our entry on this black level. So what happened? Wow, can you see? That's a successful trade over there. That's a successful trade. Let's calculate our profits. Let's calculate the pips. $54 pips. That's huge, that's huge, that's huge. So we have 54 pips over there, right? Okay, thank you very much. That was a very good one. So let's go to the long-term trades. I usually use 4 hours and daily time frames for long-term trades. So let me go to 4 hours time frame. So for support and resistance trading, let me move backwards. Okay, let me go to V75. Go to V75. So the chart is still loading. Okay, so let me use this level. Let me use this level. Let me start from my resistance. There's a resistance here. Okay, let me try to join it to this. Okay. There is a support here. So this support is serving as a resistance here. Support, resistance, support, resistance, resistance, support. There's another one. Another one here. Let's regard this as fake out. Early bites. Yes, V75 is a very crazy market. You can see the price of V75 is 6 digits. So you can't compare it to other pairs that are 3 digits, 4 digits, 5 digits. So that's why. And it's also has it also has 2 decimal points places. So one move on V75 can equal to 10 pips. Why that same move on crash 500 can be only 1 pip. So you can see the pips. Very crazy. So 15,000. Very, very crazy. So any market you are entering, so if you are buying or selling, this the lot size you used will be multiplied by whatever you see here, the pips. So that's why it's a very crazy market. And you can see the price. You can see it is 6 digits. See, for resistance, this is 112,779.36. So that's why. So you can't compare it to for example, volatility 10. You can see volatility 10 it's only 4 digits. So let me see. So you can see the pips here. You can see 30. You can see. If on this same move on V75, you would have thousands of pips. So, and this is ordinary 282 pips here. So that's why. So let's continue. I hope you understand. Okay, yeah, you've replied. Thank you. Okay, so now I've drawn some levels on this now. So let's assume the current market is here. The current market is here. So any trade you are taking according to this H4, even if you are taking it as if you are scalping, know that it is a long-term trade because it is a higher time frame. And whenever you are taking trades because of higher time frames, please minimize your risk, your lot size. Use very, very low lot size. Don't blow your account. Don't compare don't use the same lot size you use on smaller time frames for scalping, like 15 minutes. Don't use it on H4 or D1, please. So take note, because only one candle on H4 can be equal to 5 candles on 15 minutes. Yes, and if one candle on H4 sorry, if one candle on 15 minutes is giving you 10 pips, that same one candle on H4 might give you 200 pips. So, and remember, your profit or loss is multiplied by your pips. So if you use the same lot size you use on 15 minutes on 4 hours, so know that your profit or loss is becoming bigger. Okay, so let's continue. So the current price is here, right? So we are waiting for a bounce on this level, Abby. So let's see what will happen. Wow, there was a bounce here, but can we regard this as a bounce because it has not touched the level before moving up? But yeah, that reminds me, I still want to teach you support and resistance zones. So according to zone, if you used zone, you would have taken this kind of trade. So but if you are using levels, you might have not enjoyed this kind of trade because it has not touched your level. So you might be scared that it might still come back to test it. So let's leave that. Let's wait for a test and bounce. Now this is a very good one. We had a test here and it bounced and also gave us a rejection candle. Do you see that? So let's assume you've entered for a buy here. So if you entered for a buy here, let me so if you entered for a buy at 140, 115, your stop loss will be here. Your stop loss will be below. So, and your TP, you might set your TP somewhere here. Let me draw this one back. So let's use this resistance. There's a resistance here, this level. So remember, this is 4 hours time frame, or better still, you can use this resistance. So let's see. So now we've entered another trade right now. So the market went up, came down again, retest. You can see it went up here, up to this level, then came down again to retest. So at this level you'll be at loss. So this is a pullback. So if you have used big lot size, this small pullback you are seeing on H4 might blow your account. So it's better you use very, very small lot size. Do you understand? So there's another bounce again. There's double bounce. Now you can see it's our TP. Our stop loss is here, our TP is here. So that's another successful trade. Let me return this one to its level. Let me delete this. So let's continue. So, and whenever this market touches here and bounces, you are selling. So let's see what will happen. Okay, now see what happened here. Oh goodness. Okay, there was a break over here. So for aggressive traders, let's assume you've sold here. For aggressive traders, if I were you, I would have taken my profits on this level, still respect this level. So, and my stop loss would be above this level, around this level. So that's another trade we've entered over there. There's a sell trade. Now you can see that's a very good one. it has hit our TP. Wow, and still continued selling. So now how can you join this kind of trade? You can say this is a support level here, right? You can say it broke out the support level here, so you can sell it here again and TP around this level. So let me return this back to its level. So let's assume you TP here. So I'm drawing this because of this level, because of this zone. So you can see that's another successful trade. So conservative traders, if you have been waiting for a bounce and retest here, or maybe a bounce and retest, retest and bounce, you see how many opportunities you've missed over there. So wow, let me delete this level and also this level. Okay, so see what happened here. This is one of the levels we've drawn. This is one of the levels we've drawn before. See this good bounce. So this is a good opportunity for a buy. So we are buying here now. We buy here immediately after this bounce, and let's look for a possible level to take our profits. So let's use this level for TP. Let's use this level. There's a small resistance here, and there's a support here. So the market might still, and you can see there was a little pullback here also on H4. So that's a good level for TP. So let's see, and okay, our stop loss will be below, right? Stop loss will be below here. Yeah, so let's see what will happen. So see what happened here. The market nearly hit our TP and came back. So here I will introduce you to what we mean by locking profits. So if you want to lock your profits, it is better you lock profits when your trade is in profit. So for example, see we've entered the trade here on this price. We entered the trade here and immediately it went up. So immediately just shift this your stop loss. This is our stop loss, right? Our stop loss was at 1188.94. so just move your stop loss above your entry level since you are buying. So your stop loss your new stop loss would be at, let's say, 1244.12. so you've locked your profit. Now see what happened there. It came up. Our TP is here, right? It came up and came down. So by now the market would have done what? Would have locked you out. So the thing you need to do here is just wait and watch what will happen. So if this market still come down here and bounce again, then you can enter. So you can enter. So let's see what will happen. Okay, it came down. Say it came down but not up to this level, but still formed another rejection here. So let's assume we entered here again after seeing this rejection candle. So if you entered here, that same TP, so you can see. Do you understand? I hope you understand what we did there. So to stay safe, so it is better to lock your profits. So that's it. You can see that level I drew for TP is very effective. You can see how the market came back again. So here again, after seeing this bounce again, you can still enter for a buy over here, then TP here. So that's another good one. That same level we used to buy here, do you remember we bought this market here and TP here? Do you remember? So now see that same level, see it here again. We used it as a support here to buy, now we'll be using it as a resistance here to sell. Do you see? We are using it as a resistance to sell immediately after this candle, these two candles. That's a bounce over there. So let's assume we sold here, and let's look for a possible TP. Okay, let's use this for a TP, this level, this support. So we are using this support for TP, or if possible let's use this support. So both are still on, you can see it's the TP. And now say breakout here, there's a breakout here, so for aggressive traders, you enter for a buy immediately after the breakout, then you look for a nearest support, resistance. So let's use this resistance. So can you see that you entered here, you exit here? So now the market is coming back. Let's see if it will bounce, maybe break and retest. Wow, so see what is happening here now. The market came down, broke it a little bit and bounced up again. So let's buy here. So as for me, I would have exited here, but now immediately I see this kind of rejection candle, I would have exited, or better still, lock your profits. You understand? So once you notice another bounce like this, you enter again. But since the market wants to start ranging, then you exit. Just leave the market like that. So that's that about support and resistances. So those are the tools, those are the strategies you should use to trade support and resistance. So back to support and resistance zones. It is the same thing with levels, but it is different somehow. So this is how you draw. Let me go to another pair. Let me go to V100 1S. So this is the tool you use to draw zone. This rectangle, if it is not here, click on this plus button to add it. This here, there's it. So this is how to draw zone. So this is a resistance, right? This is a resistance. You want to draw it as a zone and not a level. So this is what you do. There's always a wick which is higher, which is the eye. This wick, so you are using this wick, and also the body of the candles. Just cut little out of the body of the candle, something like this. So this is what I'm saying. So place the upper rectangle, the upper level, to the eye, and adjust the lower level of the rectangle to cut a little out of the body. Do you see what I'm saying there? Do you understand? So the eye and little out of the body. So now you can draw it like this. So now this is how to use it. So anytime there is anytime market comes up like this and touches this rectangle and comes out again, that's a bounce. You enter for a sell here. And if it enters this rectangle and comes out here, that's a buy. You buy here, it has broken it. Or if it crosses it up and retests it and bounce again, that's another buy. So that's the difference. It's still the same thing with level. So let's see where okay, let's see this one. So place the eye, the upper rectangle on the eye and the highest level, and adjust the lower rectangle to cover little out of the body of the canvas. Now draw it. So see what happened here. The market was coming up, then broke out immediately. So as for, remember we are on H4. As for aggressive traders, what do? Here you buy at this level, then you look for somewhere here maybe to TP. But you can see now that almost immediately you bought, it went up a little bit. By the time the price is above here, lock your profits. So you can see the price came back inside again. So now see what happened here. The price came down below again. So what do you do here as aggressive traders? You sell again here. You sell again over here. So conservative traders, you sell here because there was a retest and bounce. So you sell here, then you exit around this level. So it's still the same thing. So the difference now is, for example, there are some places where when we draw levels, the market doesn't touch the level and it starts going the way we were expecting it to go to, and it would have not touched the level. For example, see this level. See this level here. See what is happening here. So if you've drawn a resistance here on this level and you are expecting this market to touch this level and bounce before you enter for a sell, you've missed this opportunity, because you will still be expecting that, oh, it might still come up to test that level. But if we have used a zone, so now you see how I drew the zone. So the upper rectangle was on the eye of that price, and the lower rectangle was covering little out of the body. And see what happened there. You can see immediately the market entered this triangle, this rectangle, it bounced. So you sell here. So that's the difference. So tomorrow we'll be talking about trend line. So thank you very much. If you have questions, you can drop it in my PM, or better still in the group. So thank you for your time. Bye for now.